Today, we're going to be going over Bitcoin, what's happened, where it's come from, and what it appears to be doing at the moment. So this page, the screen that we're looking at on the 2-week, shows a clear DOB, so an order block that set off a move, which is critical. This thing that many people have drawn in many different ways is so important to identify whether it's been respected or not, and the interaction with it. From the top, I'll start near the bottom so you can understand, but this is an ABC that's come down to print an incredibly high amount of volume with a greater than 50% wick into this range. It doesn't mean it's done and it's only going up from here. But if we zoom in, we can see actually how to extract dollars from this on a much cleaner basis rather than just accumulating and praying. So we can stack while it goes sideways. Most people see this as a negative because, oh my God, it's going down or going up. I'm going to miss out or I'm going to lose. This is the wrong way to look at it. This is a gift. We can see how it's reacted. Now, most importantly, is the top and the bottom of the range. These interactions are called tests. What we need to identify is how it's reacted from that, not the initial punch at the wall, at the extremity, but the reaction. Now, most important is how to take as much money from this place as possible. I'm going to zoom in though. So this is a zoomed in picture of the actual range itself. Our job as traders is to identify the structure that will give us the guide to where the areas of interest are, where we're supposed to wait until to catch a trade. So if price enters here, I do this. If this, then that. So I'm going to outline the structure that's taken place so far. Regardless of the impulsive and corrective moves down, I'm just going to focus on the actual overlying what's occurred as far as the range bottom goes so far. So just simply bottom line, top line. Now, put this off for a minute. This is what it's shown us has been respected on the bottom end. Now, has it been respected on the top? Not yet, but that's okay. Now, what we're waiting for is to identify the areas of interest. This has shown us a clear swing failure pattern rejection from the top. But what we want to do is use our tools to identify some things that give us a clear area of potential short or long. Now, from this map, first again identifying that there is a large order block here that has not been touched. That's like a magnet. What we want to do is identify the structure within this. So if this is moving in a corrective overlapping structure, we want to identify, just like this has here, the most obvious point of failure, and if we can use that for our next move. And so if that is the distance of A shown equal to C projected forward and it's failed there, we just want to use it again to identify throughout this map, has it been consistent? So also clean A, B, C shows us we're moving correctively up. There are impulsive waves throughout, but correctively. Now, those are some micro, smaller waves to show you the math behind if this, then that, which if this were to bounce from here and line up with this, which perfectly lines up with the order block and roughly in time the top of the range, again, we're not looking for exact precision, but that would give us a clean area to identify the next potential move. So again, more zoomed in though, I want to identify what has taken place and what I was able to trade most recently with the CAP protocol. So first, again, going back to identification of where the highest point of interest was here. That was already broken into. Now, correctively moving up, this is an impulsive C, but the point is the entire move preceding that was corrective. And if it showed us a clean area like I just laid out of we're watching for failure here, what I wanted to do is sweep liquidity take all the breakout buyers. This is where they go 100x leverage long, and I want to see a failure. So immediately when it goes up with declining volume, multiple wicks, closes nothing strong without immediately telling us there is supply present and reversing back down. And then this is the key. So within this structure are multiple entries. Now that we've zoomed in, we'd like to see how it reacted after the multiple attempts to fail while going up. So after we've identified the lines, is it continuing with strength or just sweeping liquidity and rolling back over? If this is a fourth wave moving up from this swing low, we want to see either strength of continuation or not. And this, with many wicks failing, repeatedly overlapping weak candles, low follow through, then finally some volume, immediately followed by heavy supply. And then if we weigh these two candles, this versus this, we can see weak candle, lots of volume, immediately bearishly engulfed by half the amount of effort, but traveled more distance in the opposing direction. That then shows us we have a bearish order flow that we want to map to identify where are the highest probability points that we can catch this thing in the direction that is now pointing. After we have a fifth wave up, after a fifth wave is a change in direction. So we want to again catch this. I'm going to identify the fair value gap. We want to see in this specific range if there is an opportunity to catch a move down. So clearly it's obviously respected this. While we have this thing mapped, we want to identify what is structure of this. And it has presented us with another break and an opportunity to catch this. So I'm going to zoom right in to see after it's presented a clear rejection. We're going to map the fibs on from the swing and identify within this range, this cluster, this OTE, where are, again, the other more important failure points to watch. What's respected? What's not? If this fair value gap is breached past and reversed through, and this order block, which is more important, is the opposing candle in the direction that started it all, that is respected clearly. Bounced off of, confirmed move down. That is a change of character candle after a failure, a corrective move up, which is a failure. There's multiple tells of this, but the point is when it closes below the initiation of the move with a control bar on almost no volume, that's an entry. That's the change of character entry. There are multiple layers of CVD and RSI to roll in on top of this, but assuming we understand the trend direction, the macro trend, and all of the things we've talked about, this is an entry. The stop is clear. The targets are clear. This is a full about 3.5 to 4 hour trade. It successfully played out over a matter of hours. Clean, quick, in and out, take the money and run. This is how the continuation acceleration protocol works. There's a lot of lines on this chart, so maybe it doesn't make that much sense, but the best part about the protocol is it's a live, on-screen guide through this with visual indicators, built in a Wikipedia of trading examples with visuals to help you step by step through this with quantified percentages based on the combination of confluence layers. So the amount of things that you can stack on top of each other that show the strength in the direction that you're looking for give you the percentage of outcome to each TP, where your stop should be, and how much money you should actually enter it with based on your account size. So everything's laid out clean. I did this for my students who continually ask me to come live in the computer. I'm on the other side of the world, so our time zone difference is not ideal sometimes when they're trading live. And so this is a step by step from front to back, all the way through everything you need, specifically back tested on specific time frames, on specific pairs. So it shows you the most relevant modern data quantified in a usable way. Sounds complicated, but it's actually laid out very clearly in the protocols. So anyways, if you have any questions, all the information is on my site, chartwhisperer.ca, or reach out to any of my socials, and I'd be happy to help.